Hello everyone, this video is talking about my retirement portfolio that I believe they will compound my assets optimally. This portfolio is suitable for the following investor. First, want to sleep well at night as aggressive market monitoring is not required. Second, low risk. If any of these companies go bust, this means that the whole sector is game over already. Third, manage to beat the bank interest, CPF, or even market consistently. I'm looking at an average of 15 to 20% annual return per year over 10 years. I also believe that they will be able to make it during the bear market, while also manage to hit new high or generate good returns after the market reverses or in a bull market. In addition, for a well-diversified portfolio, I think that a portfolio consists of 8 to 12 stocks are good enough. If we have too many stocks, it will be very difficult for us to monitor each of them. It would be better just buy an ETF instead. Here are my portfolio for the retirement and their respective sectors. To make it simpler, I allocate each stock an equal amount of weightage with 12.5% each. These are the companies: Thermo Fisher Scientific Manufacturing (TMO). Second, Microsoft (MSFT), Alphabet (GOOGL), Taiwan Semiconductor Manufacturing (TSM), Costco (COST), Apple (AAPL), United Health (UNH), Berkshire Hathaway (BRK.B). This is the sector allocation. Financial 13%, technology 37%, communication services 12%, healthcare 25%, and consumer defensive 13%. You may find that I still prefer technology, which consists of 37%. Communication service, Google, can be considered between technology sector as well. Healthcare and consumer defensive sectors are relatively defensive, consists of 38%. BRK.B is for value stock allocation, which consists of 13% of my portfolio. Why I prefer a portfolio with higher weightage of technology? First, technology is creating future, and stock market is about future. Second, check the return of the QQQ, SPY, and BIA. As general for the last 10 years, the return is generally higher for QQQ, which is technology heavier. Next, these companies must fulfill the following basic criteria. I will be using Microsoft as an example for all the criteria below. I will prepare separate posts to talk about the other 7 companies. First, these companies must show a consistent growth of revenue, net profit, and operating cash flow. Take Microsoft as an example. The last 5 years revenue trend, a clear uptrend. Earning per share, EPS, uptrend. Operating income, uptrend. Microsoft is a good company that can make consistent revenue, net profit, and operating income. Second, these companies must show healthy debt profile. This is to ensure that they have enough cash flow and assets to even sustain during recession. We can use Osman Z-score, which is a numerical measurement that is used to predict the chances of a business going bankrupt in the next 2 years. I'm not going into details of the model. When the Osman Z-score is smaller than 1.8, it is in distress zone. In between 1.8 to 3 is gray zone, while more than 3 is in a safe zone. From the Guru Focus, Microsoft has an Osman Z-score of 8.71, which is very safe. Even we look at the history data, the minimum for Microsoft is 3.12, which is still in the safe zone. Thus, Microsoft is a safe company to invest in as it is not easily go bust based on its current financial status. Third, strong economy mode. A company with strong economy mode could easily survive during the high inflation era and during the period of monetary tightening, such as during the current market. Gross margin can be used as a simple method to measure economy mode. This is a simple illustration of gross margin. The higher the revenue, the more economy value the outputs have, the higher the gross margin. The higher the amount of economy value is added. A company with higher gross margin is being able to do three things: create value for their customers, keep the value away from their competitors, high switching costs. Above three factors are important to increase the stickiness of customers. Take for example, if Microsoft increases its license price for 5%, will the whole company change their whole operating system from Microsoft to iOS or other operating platform? Most likely they won't. Not only it will cost a lot more to change the whole operating system, the downtime in between and the training costs were also significantly higher than just pay the 5% increment of the license fee. Thus, when the inflation is coming, the company with strong moat can just increase their price. Microsoft has a profit margin of 60 to 70% for the last 10 years. This suggests that Microsoft has a strong moat and maintain its competitiveness. Fourth, market cap. For the stock to hold for long term, I prefer a company with over 10 billion market capitalization. Large cap stocks are generally more stable compared to small and mid cap stocks. The volatility is relatively lower as well, as large amount of shares are held by insiders and big institutes. In addition, small cap or penny stocks can be easily manipulated. For instance, Singapore High Court convicts 2 for 6 billion penny stocks manipulation. We could lose a lot of our hard-earned money because of these manipulations. By contrast, it is extremely difficult to move the price of big cap stocks through manipulation. As on 30 May 2022, Microsoft has a market cap of 2,000 billions. It will be extremely difficult for a single institute or retail investor to manipulate the price. Fifth, long-term uptrend. This is one of the technical criteria. Using weekly chart, we can see that Microsoft is in a long-term uptrend. This is the summary for the X stocks by evaluating with the above 5 criteria. I have done the homework for these X stocks. Please subscribe my channel and give me a like if you find this useful, as it is quite time consuming to prepare and organize the data to show them in the video. I put a general acceptance criteria for each parameter. For example, profit trends have to be increasing, Osman Z score more than 3, market cap more than 100 billion, and long-term trend must be out. Take note that gross margin is depending on the sector. We can see that Costco has a lower gross margin, but it is mainly because of its business model. For BRK, gross margin is not applicable. I will talk more about it in the future video. I will prepare a more detailed analysis for each stock in future. In fact, I have more than 10 steps to identify a good company with good fundamentals before invest my money in. I will also prepare a series of tutorial videos for a step-by-step guide to identify a company with a good fundamental. Please subscribe my channel if you would like to receive the latest update. Of course, this video is for educational and research purpose only. Please do your own research before investing in any stock. What are your criteria to screen for a stock to hold for retirement? Or you prefer ETF? Let me know in the comment below. Please give me a like before you go. Thank you and see you in the next video.